First of all, thanks for everyone for joining. Today, I will introduce our team. We have a few new joiners to our team as well. Would you like to introduce yourself?
Sure. Thank you, Catherine. Hi, everyone. My name is Callum. I was a hedge fund analyst at Man Group in London for a number of years, specializing in working a long-short equity fund, managing around about $1 billion, being a generalist analyst there before launching my own startup a few years ago that I exited this year. Joined MarketX in the past couple of weeks and really excited to kind of get involved and help the team. And looking forward to speaking with everybody, hopefully over the next few years as well.
Great. So let's get started. We have a very exciting webinar today. Today, we're going to have coverage over Ledger, also our favorite from the AWS for blockchain company, Alchemy, and we're going to cover car buying and also Waymo in a little bit. So first of all, Colin, please get us started with Ledger.
Okay, so hi everyone, and welcome to my presentation on Ledger. Let's begin with kind of just describing exactly what Ledger is and what it does as a company. And so Ledger is a company in the blockchain universe. What it does essentially is it's a hardware wallet for digital asset keys, one-stop shop platform for enabling clients to securely store, transact, and stake their crypto. The Ledger's hardware wallets provide full isolation from private keys to digital assets and internet devices like a computer or smartphone. Hardware wallets are the safest way to store keys for digital assets. So let's go into the team a little bit. So the current CEO is Pascal Gauthier. He's had experience at Calcu and Criterio and also Mosaic Ventures as well. At Criterio, he was COO and responsible for initiating a transformation towards advertising, and then became a venture partner at Mosaic Ventures, and now also serves on the board of Keiko, which is a crypto-related data site. Ian Rogers, the COO, was formerly Chief Digital Officer at LVMH for 5 years, working with a portfolio of companies, including Louis Vuitton, Dior, Sephora, and Hennessy as well. And then another person to note is Quentin, currently the CFO, who started his career at Ernst & Young in Paris, specializing in financial control, and is now, as I said before, the CFO of Ledger. So what is Ledger's business model? Ledger's business model is essentially two core products, the Ledger Nano S Plus and the Ledger Nano X. So Ledger Nano S Plus is the cheaper unit, coming in around about $83 per unit, with the main features being complete coverage of cryptocurrencies, unlike some of its rivals, a built-in 4-digit PIN security lock, cryptographic keys protected by a secure chip, and built-in onboarding with seed word generation and recovery. The step up is the Ledger Nano X, retailing at around $149 per unit, with its main features being complete coverage of cryptocurrencies with additional storage on top, USB and Bluetooth connectivity, and plausible deniability with an additional PIN linked to a passphrase that can be defined to create a hidden account. And so up until this moment, Ledger's raised a significant amount of funding, with its most recent round being a Series C in June of 2021 at a valuation of $1.3 billion, raising funding of $380 million. In terms of the industry outlook, this is where it starts to get interesting and exciting. The industry is, of course, composed out of one need to have to store keys to digital assets securely and safely. Now, there are three main options for doing so. One option is to use custodial services given by large centralized exchanges. A second option are software wallets, otherwise known as a hot wallet. And the third and final option, which is what Ledger provides, is a hardware wallet, otherwise known as a cold wallet. Now, the market size for hard wallets is around about $220 million in 2021, but with many forecasts believing that the value of the market could go up to as much as $1.5 billion or over in 2030. with that being with that representing a roundabout growth of 24% a year between 2021 and then. So in terms of an industry outlook, why are hardware wallets a superior option to other types of ways of storing digital keys? It's pretty simple. With software wallets, you have vulnerability in the fact that the software is of course stored on internet connected devices, which opens the keys up to vulnerability from hacking attempts and things. That's not the case with a hard wallet. A hard wallet instead is isolated from the internet and is held on a physical key that is connected by USB or Bluetooth. In tangible terms, private keys are often stored in a protected area of the microcontroller and can't be transferred out of the device in plain text. They're also immune, as I said earlier, to computer viruses that make software wallets vulnerable, and they can be used securely and interactively. Private keys never need to touch potentially vulnerable software. So where do we stand in terms of the current market trends? The tailwinds for Ledger really are pretty strong in the fact that we've seen massive vulnerability in recent years in other forms of storing digital keys. You can see on the right-hand side, we've got a long list of just in the last couple of years of cases of exchanges or software wallets being hacked and with vast amounts of assets being stolen in the process. All of this acts as a tailwind that pushes cryptocurrency or digital asset holders towards adopting a more safe and more secure way of holding their assets. A really recent example of this was just the 2nd of August, about a week ago, where Solana owners had reported their funds missing. This is an example of a software wallet proving to be vulnerable in ways that hardware wallets aren't. And as these attacks have gone up in frequency and also in amounts stolen, we expect far greater adoption of hardware wallets as holders look to protect their assets more thoroughly. Now, moving on to Ledger, though, in terms of where it sits within this market, it's very simply defined in that Ledger is a quality market-leading product with competitive pricing. It has more coverage than its rivals, with popular coins like Graph Token and Uniswap on Ledger, and not on its biggest rival like Trezor. It also has Bluetooth functionality and an accompanying mobile app available on the Nano X, not available on any Trezor device, which leads to greater usability and functionality. And it's also got competitive pricing as well, and a significant price difference for the top of the range products. The Nano X comes in at around about $149 versus Trezor's $280. What all of these factors have culminated in is a very, very dominant market share of 82% in 2021. But don't take my word for it. Look at some independent magazines in terms of how they rate Ledger. So if you look at the first graph, first column here with Ophir Bagel evaluating the more cheap options on the market, he gives the Nano S Plus a 5 out of 5 and a Trezor 1 just 4.5. You can then see in these other reviews where they evaluate based on quality without a price consideration, the Ledger Nano X dominates. So competitively, where does this place Ledger? So Ledger has consistent excellence in its product manufacturing, which has resulted in significant brand goodwill and higher margins. Consumers are willing to pay for the very best products to protect their digital assets. We expect also Ledger will gain economies of scale in producing software that goes along with the hardware with its 80% market share as well. All of this strength in its competitive position has allowed it to recently push up prices for its most affordable units from $49 to $83. So in addition to significant volume growth that we expect Ledger to benefit from, we also think that it's got pricing power that will allow it to get top line growth from price increases as well, which is important. So how do we go about valuing Ledger? Now, what we did for Ledger, we went from that single assumption, or the single understanding rather, of Ledger being a powerful brand within hardware. So we looked at kind of publicly comparable companies with significant goodwill, and then we determined that Ledger's margin would be somewhere around 17% for its EBITDA, and also assuming that bill of materials would come in between around 10 and 20%. The cost of manufacturing these devices we assume is particularly low, but with the ability to charge high prices owing to brand strength, we expect margins to be very high. So in one potential valuation scenario, we assume that 2022 experiences a little bit of a dip with volatility in the crypto market, but then rebounds from there. And then in 2027, we expect revenue to compound at a growth rate of around about 25 to 26%. In terms of the valuation, again, we use like-for-like comparables of kind of hardware companies targeted at consumers on the public market. So in one potential scenario with an EV to EBITDA valuation of just 10, we expect a potential return of around about 2 times based on the secondary valuation. In terms of a potential return, assuming growth rates continue until 2030, we would imagine a potential return of 3 times is possible as well. So the core drivers of this investment, what needs to happen for this investment to succeed? Well, of course, whilst volatility is a fact of any asset class, a prolonged period of volatility and negative returns may have the adverse effect of reducing the asset class's penetration of Main Street portfolio. Now, with crypto, we're all familiar with the negative returns this year and such, and we would be conscious to stress that we've got to see sustained growth in adoption of cryptocurrencies going forwards as well, in order for Ledger to be adopted as well, and Ledger to maintain the 26 or 25% growth rates that we're expecting going forwards. On a company level as well, Ledger must continue to lead in terms of its product quality in the market and stay ahead of any new hacking methods to access hardware wallets. In terms of risk, it's largely the same as what I just echoed before. We can't see a significant risk would be significant deterioration in the cryptocurrency market. Large-scale adoption of digital assets will determine the performance of this asset of Ledger, and we need to make sure that cryptocurrency continues to perform well. A second potential risk is what will become of the typical profile of digital asset holders, whether digital asset holders will be traders who need to trade on centralized platforms, or people seeking yield on DeFi platforms. This will have the effect of taking potential market share of private key storage away from the hardware market and Ledger as a consequence to centralized platforms. I would also just stress that in 2020, Ledger also fell victim to a data leak. And whilst all the digital assets were protected, some of the users' addresses and personal details were leaked as a consequence, exposing them to potential social hacking as well. Ledger says that it's addressed all of these problems that it found in its process at the time, but again, we would need to make sure that, going forwards, that this risk was mitigated as well. So, a deal summary. What is this deal? We know that digital assets in recent years have seen mainstream adoption and usage, massive growth. Concerns around securing private keys have meant that holders of digital assets have adopted physical wallets to hold these keys. Ledger is the best in class, simply, consistently in terms of features, functionality, security, and price. Ledger has built a strong competitive position as a consequence, and we're expecting a compelling investment opportunity should cryptocurrency continue to do well, of around 2 to 3 times within the next 5 years, with conservative forecasts on margins and exit value and exit multiples. So a high margin growth business with a large market will command a strong valuation should it be publicly listed, but there's also potential for Ledger to be acquired by a leading exchange who are looking to keep their users within their ecosystem and benefit from synergies there. I'd be happy to take any questions.
Yeah, thank you, Cal. I wanted to add on a couple of things that Cal mentioned, just to provide some color. So one of the things that we looked at was just the market size, right, of hardware wallets. And I think people would be surprised that it's relatively a small market at this moment in time, given that it's a secondary effect of crypto adoption. Nevertheless, for Ledger, they have the vast majority of the market because, as Cal mentioned, they have a superior product. Everybody loves it. I pinged a couple of friends of mine at different exchanges, crypto exchanges. You know, they definitely communicated that Ledger was by far the best product in the market. And then on my side, having worked in Shenzhen and in the hardware space, you kind of understand the product itself, right? They have, of course, multi-layers of software and features that are very integrated, but effectively the cost basis is a USB stick plus a better chip and some LCD screens. So the BOM of the product is relatively low. I would personally estimate $10 to $20 maximum, depending on what type of chip they're using. So you have a very high margin product that is industry leading in a market that is growing, right? Different people, of course, have different views of the crypto market, and depending on your view, the potential for Ledger has different outcomes. In terms of valuation, we really try to be conservative with it, given the current kind of climate and potentially winter of crypto. So we really looked at the growth very conservatively, but it can rise and very quickly. We also looked at comparables related to Apple, Nintendo, which are much higher margin, of course, with software and hardware, but also with Panasonic and various kind of Acer, various consumer electronic providers, where we think Ledger would be somewhere in the middle, given their margin and potential high growth. So overall, we think that if you have a strong thesis around crypto, this could be a great deal. And maybe Cathryn can share more about the current opportunity that we have in the secondary for Ledger.
So today we have a 10 million allocation into Ledger. We are closing this deal in the next 2 weeks, so please email us if you have any questions. But in the meantime, also, I just want to remind everyone who are listening in, you can raise your hand or ask a question in the Q&A section. Please don't be shy. We wanted to use this time to answer any questions live and, to see if there's any outstanding items we haven't covered. Great. Julia, you have a question. Please go ahead.
Hi, yes, thank you for the presentation. So I just want to ask first is the valuation of this offering, and also the revenue and EBITDA shown in the presentation. Is that the company's actual number for 2021 and 2022?
Yeah, we got the information from the company, and right now, Ledger expects to reach 482 million revenue in 2022. They did about 181 mil last year. Obviously, these are private information, so please keep it to yourself. We expect everyone here to have interacted with our team before and signed some kind of NDA before. But as you can see here, yeah, we do try to keep it amongst our investors only. So right now, we're actually investing at a discount to the 1.5 billion valuation at a Series C financing raised in early 2021. So this is actually a discounted opportunity. Our minimum to get this investment done is 1 million, but our individual minimum will be 100K. So please let us know if this could be interesting, and we're happy to share more as well.
Just to quickly follow up with Cathryn, so I think we're at a relatively 30% discount, but in terms of revenue numbers, we try to be more conservative than what the company actually shared of what their projections are. Because we try to be independent of what the company is saying. So we have top line numbers, and then for me, it's just basically trying to make some estimates around how that organization goes. I think the company also is trying to diversify into potentially higher margin or even kind of tech related businesses and staking and exchange. So they're, I would say not necessarily super lean and just selling the hardware. They're also trying to build community and trying to create their own ecosystem. So long term, that might or might not have drastic revenue impacts, but in the short term, we basically analyze it as a hardware company.
This could be interesting to you. Please ping me and Mike, and we'll follow up with the company subsequently to get the EBITDA numbers. All right, in the interest of time, we're going to move on to the next one. Next, we're going to cover Alchemy. Wissam, please take it away.
Sure, thank you, Cathryn. Okay, so for the next opportunity, we're staying in the same blockchain Web3 space with Alchemy. So Alchemy was founded in 2017. It's a developer platform that does help companies build scalable decentralized applications, basically without the hassle of managing blockchain infrastructures in-house. What what that means basically. I'll come to that, but they really been surfing on that mass adoption of blockchain Web3 with experience of the last 3-5 years. They really started this company when we started to see a need for infrastructure in that space, new infrastructure, new innovative infrastructure to support that growth. So as you know, blockchain technology has been surrounded by plenty of hype, which makes many businesses kind of keen to adopt it, but also they have a lot of concern about all blockchain challenges and risks. So what I kind of say is we are at a very unique time in the evolution of Web3. The space is finally graduating from its early infrastructure phase, and with the help of companies like Alchemy, it's now capable of supporting real-world applications for mainstream audience. So this has kind of helped support the adoption of the apps, decentralized apps by non-crypto players. And when you compare those two phases, which is pre kind of Alchemy infrastructure type of companies, and the space has been crowded with players that originally have businesses that are non-blockchain, non-crypto. For instance, some use cases that we've seen and kind of prove and demonstrate the need for Alchemy type of businesses is, if I was to take an example, you have pharma companies that some of them have developed blockchain applications to eventually secure supply chains for medicine and manage confidential data, test data sometimes for themselves. You also had Walmart in the retail space, which in collaboration with IBM developed a blockchain system that does cut product tracing times from 7 days to 2.2 seconds. That's massive achievements for these companies. And in the government space, we've seen last year in April, the government of Ethiopia, or actually the Minister of Education of Ethiopia, announcing a deal with IOHK, which is a blockchain developer, to create a blockchain-based digital IDs for millions of students. So this is what really ultimately drives massive adoption. People actually testing, trying, and adopting it in some segments, in some sort of crypto or blockchain use. So what you're seeing is another revolution. So I identified kind of a few revolutions in the past that are kind of similar in terms of how they've been adopted and how they've been kind of accelerated by sort of platform layers. So in the past, you had the PC, you had the internet revolution, and now you have the Web3 revolution.
Can I jump in? I think AWS for blockchain is definitely very interesting. Can you tell us more about why Alchemy, amongst others, is definitely the company to take a look, and how have they achieved some of the milestones? I mean, the company went from 3 billion to 10 billion in no time. So please give us a few more, individual examples of why this company is doing so well.
Sure. I mean, from a scale perspective, and that's the one of the largest achievement, they kind of power most of the largest blockchains. Just think of Ethereum blockchain, they power 20% of the top applications. That's massive. When you look at number of users, it's millions of users per week across 197 countries. That's also massive. And when you look at DeFi assets, I think NFTs, about 75% of all asset value is powered by Alchemy. So it's kind of huge. You also can look at the type of customers that have adopted them. The platform now powers the majority of the leading companies and protocols in Web3. You think of Dapper Labs, OpenSea, Infinity, Axie Infinity. These names are the players that run kind of most of the volumes or have large volumes running out there. So they're all transactions powered by Alchemy. So when you look at it, they power about, over $45 billion annually in with transactions made by millions, tens of millions of users across those multiple blockchains. It's a milestone they reached, but they're also scaling rapidly, onboarding more and more customers and companies every time. The company, why we also like it is essentially those two guys. I don't know if you guys have been able to look into our website or our YouTube channel, but we've been pleased to have Joe join our MarketX investment conference last year. It was a great chat with Cathryn and Joe. But basically, these guys met on the bench in Stanford. They used to be teaching assistants for the database class. One of them then eventually joined a large tech company, and we kind of like them because they're complementary. One is a top product leader, the other one is kind of more of an engineer founder with expertise scaling massive infrastructure.
Maybe I can also jump in to talk about why we believe this team is great. Just to add, historically, I actually worked in the same office as Nikhil and Joe. So both of them have been great friends of mine since 2014. At the time, they were founding a company called Down to Lunch. And at the same time, I can see that they are both visionary founders who are looking to build the next Web 3.0, which in this case, they are revolutionizing this industry. When we met, when Joe and Nikhil were thinking about starting this company, it was at a very interesting time. Crypto is still very understood by a lot of people. And when we think about what is really underpinning the entire industry's growth, is actually allowing more devs to adopt this new technology easily. So what they're solving is really an issue that has been countered by many teams. How do you onboard to the blockchain easily? How do you get support from the entire ecosystem? So for today, you can see, initially they got backing from Charles Schwab, the founder of the investment manager, Charles Schwab. And then they also raised money from quite a few large, investors around the world. Wissam, would you mind moving to the next page? So from here, you can see Lightspeed, Silver Lake, Andreessen Horowitz, Code2, Peter Thiel, many of the largest investors, not only from the traditional Web 2.0 companies, but also the best investor in Web 3.0 are all invested in this company. In barely 1 year, they went from 500 million to 3.5 billion to 10.2 billion. Granted, we do believe that this valuation is quite high. So at this moment, we're actually getting this investment at a 50% discount to the last round. So if you are interested and want to participate in the evolution of the blockchain space, please reach out to us. We're very excited about this opportunity and what Alchemy stands for. Mike, would you like to add in your points here?
Yeah, absolutely. So, from my view, Alchemy is really an investment into the overall ecosystem of Web3. Of course, right now we have a winter, as we mentioned before, but basically the thought process around Alchemy is that it's really focused on the utility, less on speculation, but on potential future utility of the Web3 ecosystem. Right now we have DeFi, we have different types of gaming, we have different types of applications, supply chain, NFTs. So this is really kind of slowly emerging as an industry. And if you think about kind of our cell phones as kind of the emerging, new technology, only when, Instagram and Snapchat and all these new kind of new age apps designed for the phone came across, everybody started downloading it and everybody started using it at scale. So we're really still waiting for that type of application in Web3. And the bet here would be to say that, hey, even though speculation is down, the future of Web3 is going to be very, very interesting. And these guys is really the underground foundation that's powering all these different applications. So, we have the allocation in terms, it's a preferred shares from a previous investor. I think that was an angel investor in the round. And yeah, we're excited to offer it for those who are interested in the Web3 company.
Thank you. Do we have any questions? Again, please feel free to raise your hand or type in the Q&A section.
Hi, yeah. I don't know if I have missed it. I just wonder if there's any financials.
So on this company, we have been told very strictly not to talk about too much information on the financials. What we can discuss is last year, 2021, they made about 150 million in revenue. Our understanding is that they're increasing, double or tripling every year. So that's what we can disclose at this moment.
Okay, thanks.
Thank you. Great. Next, we're going to cover Rimac.
So we spoke about Rimac last week because it's a very interesting secondary deal that we have opportunity to invest in. I'm going to do a very quick overview for this week because there's a couple of different interesting developments that came across in the past week. So Rimac basically manufactures the most crazily acceleration electric vehicle sports car in the world. Their own hypercar is called the Navara. It has about 2,000 horsepower and goes from 0 to 60 in 1.85 seconds. So the company was created by Rimac, who people are considering the European Elon Musk. His background is very interesting. He started when he was a teenager, innovating in battery technology and creating electric motorcycles and bikes. He took it to the next level, started experimenting with his old beat up BMW 3 Series, and then won a ton of awards for his innovative approaches. And since then, he's been Forbes 30 under 30, top, getting all these awards for various accolades based upon his technology. He's also assembled a great team of both technologists as well as industry veterans in the automotive industry to help build out the company. So at this time, the company has been invested by SoftBank, Goldman, Porsche in their most recent $500 million round in June 2022. Previously, it's been invested in by Hyundai and Kia Motors, as well as the Camel Group and Invest Industrial Holdings. Invest Industrial, for those that who don't know, have about 11 billion under management, act as a holding company, is also in the automotive space. So fundamentally, Rimac has two businesses. It has Rimac Bugatti. They just acquired Bugatti, the legendary sports car brand, from Porsche that the transaction finalized last year, where the company is basically building very expensive $2 million sports cars. And then on the other side, the main business is actually Rimac Technology, where the company is innovating on a few different areas, but the main two products are for the battery technology as well as the powertrain technology. So these two technologies, Rimac is selling as a tier 1 supplier to various automakers, including Aston Martin, Hyundai, Porsche, BMW, etc. So there's 20 different customers that have been publicly announced and plenty of potential customers that have not been announced. So Rimac is really creating a very clear segment of the hypercar, the sports car, and then ideally premium performance vehicles that they can electrify going forward. A couple of different data points. Number one, recently, I think Europe said by 2035, all new vehicles will be electric and they will not be allowed to have internal combustion engines. So that recently came out in the last couple of weeks. The second area, if you think about what Rimac is doing, is really around the idea, starts around the idea of range anxiety for electric vehicles, right? Because consumers really want to be able to drive further, similar to a traditional vehicle. Automakers are putting more batteries in the car so that the range anxiety is not an issue anymore. Well, for performance cars, the batteries really weigh down the vehicle, which reduces the ability for the cars to perform, right? To corner at a specific speed, to go accelerate in a very fast way. So basically, you have to have better battery packs that have a much better energy density. And that's the core technology that Rimac has brought together for its battery packs. And it's rated the top battery pack in terms of energy density in the world. Furthermore, if you think about it, after you have that amount of acceleration for that mass, you have to be able to control that power. You have to be able to traction and turn, as well as brake. So the e-axles in the powertrain are the second innovation that Rimac has really focused on to be a very competitive product in the market space. So in terms of these two specific components, Rimac is really focused on lower volume pack manufacturing, where they're working with the LGs, the Cattles, the SDKs of the world to provide actual cells for them to design and then basically integrate into a pack that has these type of characteristics that are very, very high performance. With respect to the e-axle, they're really focused on building the e-axle system versus the subcomponents, and there's always integrated within the car itself, where it's a balance between pure performance and pure cost. So overall, right now, as many of you know, tier 1 suppliers of auto companies have about a 3 to 7 year new product development cycle, which means that any car that's launched next year, they started working on it 3 to 7 years ago. Tesla, for those of you that are interested in Tesla, part of the reason why they're so competitive is that they've shrunk that development cycle much lower than a traditional automaker. So given this type of development cycle, if you can see the revenues that we estimate for 2025, that is really where the company is really going to take off revenue-wise, because all of the contracts that are going on right now is either from the sale of Bugattis or their own sports car, but very little from the tier 1 supplier of the batteries and the powertrains. But in 2025, that's when they anticipate substantial revenue coming in from the production of the cars, for the customers, for example, Porsche or Aston Martin, etc. And then they project a very strong growth. So for us, what we're looking at it on the conservative side is going to be a 2 to 4x potentially in the next 4 to 5 years. But if you're a little bit more aggressive, the potential returns could be much higher. Recently, they just started shipping the Navara to the first customers, where the first customer was actually a former F1 driver winner that also documented his receiving and going to the factory to receive his car, which was $2 million, custom designed, and it's already garnered a couple million views on YouTube for the experience of receiving the first production model of the Rimac Navara. So perhaps Cathryn can share a little bit more about the secondary opportunity we have with Rimac.
Thank you so much. So at this moment, we have 6 million allocation into Rimac's latest round at 2.6 billion valuation. We're also in the process of hoping getting more allocation at 10 million. We might be able to get a lower valuation, but at this point, given what Mike has mentioned in terms of the potential exit, we look at potential 3 to 5x return on the conservative side, and also this week, Rimac has, disclosed a new car, and the F1 drivers seem to be very happy with it. So we believe that, Rimac is on its way to revolutionize EV fast cars. Please let us know if you have any questions or interest. Lastly, we would like to remind everyone we're also closing Shipper and car buying subsequently. So Shipper, as we talked about before, maybe if you haven't heard about our webinars in the last 2-3 weeks, Shipper is the largest e-commerce logistics play, software plus offline warehouse, etc. They basically help e-commerce players to create the entire ERP system and also allow folks to store their products at the warehouses all over Indonesia. This is currently a business that's available in Indonesia, Thailand. They're also looking to expand to Vietnam and Philippines. We are looking at a Series C which is 100 million, which 80 million has been filled already. This is a deal that we have a high conviction in, given the largest, rebound of e-commerce since COVID, and also we believe logistics is a large infrastructure play in Indonesia, where there's 300 million people looking to spend more. So on that deal, we're probably looking to deploy 1 million from our own MarketX Deep Tech Fund. At the same time, we're also discussing with several family offices. We're looking at 10 million investments in this deal. Do we have any questions regarding Shipper at this moment?
What's the valuation and what's the valuation multiples on this Shipper?
Sure. Shipper is currently raising at 600, which just a few months ago, they were raising at 1.2 billion. So we believe this is a 50% discount. And also last year, they made quite significant revenue. Mike, do you mind adding on?
Basically, we're estimating that this year they're going to hit about 400 top line. So that's the gross revenue, but their profit, they're going to be profitable or at least break even by the end of the year. Last month, the revenue is about 20 million and growing significantly as well. So they're really a warehousing play. So the revenue multiple for the valuation is much lower. But in reality, they're very sticky. They're growing very substantially in the Indonesian market, and their offering really fits Indonesia and Southeast Asia very well. Number one, because e-commerce is booming there. Number two, the consumer is really digitized. And number three, with respect to Indonesian, basically geography, you have 20,000 islands where you have plenty of different 3PLs or different shipping companies like FedEx, like UPS, like DHL in the US that controls major market. There's tons of different companies serving small pockets of the island chain. So because of that, Shipper's 4PL solution that aggregates that together is very, very competitive. And I think lastly, we really like it because if you think about the Indonesian e-commerce market, it's really dominated by two large players, Tokopedia and Shopee, and they have about equivalent market share in about the 30% area. But there's no one dominant marketplace like in the US or other locations. And because of that, fulfillment, if you think about a small seller, they would want to be able to sell on multiple platforms simultaneously and not only be committed to only one, which means the fulfillment of those products should be independent. And that's what really Shipper is doing. They're an independent fulfillment system for different, as well as shipping provider for different sellers on e-commerce. So we have really high conviction that this is a great deal and very excited to offer it to our clients.
So what's the difference between gross and net revenue, both in terms of accounting items and percentages? And secondly, you think they're going to hit 400 this year, but if it's August and they're only at 20 run rate, then how are they going to hit 400 by the end of the year? I mean, I'm assuming they're growing, but it's the second half already.
They're growing very significantly. So happy to Glenn to walk you through on a different call. But for them, because a lot of their revenue is from shipping, so they receive the top line, gross revenue number, and then they have to pay out to some of the shipping providers for each individual package. But in terms of the detailed financials, I'm happy to circle back and give you more details.
And I'll just jump in here. The way we operate in terms of our company is that we like to sign NDA, also LOIs with potential interest investors. The company has given us specific guideline on when to discuss certain numbers. So if you like to find out more about Shipper, please message me directly, and we'll make sure that we get you the information you need. So next, we have going to talk about Carbyne. So I know we only have a few minutes left, so I will briefly go over what this opportunity is about. So Carbyne is, focusing on the United States emergency response infrastructure. Right now, more companies such as Uber and Lyft has more information about the customers than our 911 emergency response units. So Carbyne is a cloud-based next generation 911 software, which enables emergency response teams to connect with the caller through voice, text, video, arms with critical data like precise location tracking. It's an end-to-end integrated emergency solution for the entirety of emergency management workflow. And today they serve about 400 million people, which currently process 400,000 calls per day. The company also has contracts with 71 customers, including Miami-Dade PD, NYPD, Mexico City, other medical response units as well. Today, the B2G units, which we call, business to government, has multiple use cases. Number one, they have ride sharing, insurance, employee safety. Many of these use cases are also in countries such as Mexico, India, Brazil, beyond the United States. Carbine's technology is 3 to 4 years ahead of its competition as it continues to develop a cloud-based contact center with real-time mission-critical capabilities. At this moment, the company is doing about 24 million ARR, 136% year-over-year growth. And by the end of this year, we believe that they are going to achieve 90% product margin and also 80% gross profit margin. We also believe that they're going to become cash flow positive and profitable by end of the year. So currently we have a 10 million allocation in Carbine Series C financing. So this is a primary deal, and the company is valued at 200 million, which is 8.3x fiscal year 2022 ARR pre-money valuation. Now the company has Hanako Founders Fund, Collab, Valor, and former U.S. Director of the CIA, General David Petraeus, as amongst others, as existing investors. So why do we believe this is a great deal? First of all, given the current macro environment, governments and contracts are relatively growing and stable. We also believe that the general safety concerns around the U.S. For the pandemic last 2 years, everyone's generally very concerned about safety, which helps with the overall macro environment. As more police stations embrace the actual products, we think so far, companies have given very significant positive response in regards to its deployment. And then lastly, overall, the management team is definitely an all-star team. The former Israeli army officer who served in the special elite units serves as the CEO, Amir Elichai. And also Amir has founded Sky Project Holdings, which is an entrepreneurial investment group, and Rahul Shes, who is the CFO, who has recently joined the company and has as head of finance previously at Emerge. Lastly, this company about to release more client lists with us. We have heard many positive updates from its POD programs. So please reach out to us if you have any questions. Again, today, I know we are running out of time, but please reach out to us regarding Alchemy, Pipe, and many of the deals we went through today. So Carbine Shipper is closing in the next few weeks. And if you have any question regarding Ledger, this one is closing this is the last week.
I think you guys did a great job with these 4, but one other that's on our platform that's closing soon is a secondary opportunity in Pipe. Pipe's a developer of a financial platform that provides non-dilutive capital to companies with sticky and predictable recurring revenue streams, thus unlocking deferred cash flows and allowing a company to grow more quickly and in a more capital efficient manner. We're syndicating 10 million in a MarketX SPV at a 30% discount to the company's last primary, which was at a $2 billion post-money valuation. So if you have any interest in this deal, others displayed on our website, or the 4 deals that were discussed today over the webinar, please contact us at business@themarketx.com. And thank you for your time.
Great. Thanks, Brian. As always, thanks everyone's participation today. And we're about to release a new version of our website, which will go through all the investment details, and also you can find out the latest availability, valuation information. Please do not hesitate to reach out to us. We're right now trying to do a beta test amongst our earliest users. So please let us know if you like to get a test account to try out our new product. It's stage@marketxventures.com. So look forward to seeing you there. Thank you, everyone. Have a good week ahead.